Now, looking at yesterday's bond auction, Sam, we saw both oversubscribed, but we also saw marginal rates up 15.25% and 15.44%. What are your key takeaways from the auction?
Well, with the oversubscription in the bond market, I think the interest in the fixed income market is still very much there, especially even from the local players. We've seen that the PFAs, the non-bank financial institutions are still very much interested in the long side of the curve. This kind of tally with their liabilities, which are also long-termish in nature. So we saw that the demand was actually 62.8 billion in the 2017 bond, while in the 2022 bond we saw demand as high as 68.9 billion, and the yields were just printed marginally around market levels at the moment. So in my opinion, that shows that the interest is still sustainable. The fixed income asset class remains a viable investment opportunity for both the local investors and even the offshore investors.
But Sam, I'd like to get your thoughts on foreign investor interest in the fixed income markets. We've heard some speculation from analysts that foreign investors may be losing interest in our fixed income markets. Does this hold any water?
Well, I wouldn't say it's 100% correct. We've seen a lot of investment in the fixed income market, and when we talk the fixed income, I'll probably want to add the T-bills market into that market, so for a general interest pattern. Even though we've seen them more in the treasury bills market, we've also seen some of them trying to play the duration market by going into the bond side. The interest in the last 3 months has been very much, but at the moment, all the issues around Europe, all the Greeks issue, the Spain issue, is making them to just try to watch the market again. You will recall that whenever there are issues in the global world, one of the things these investors do is to quickly look at the emerging market and take out funds and try to play safe than being sorry at the end of the day. But what we're seeing now is just 1 or 2 investors taking out some funds from the market. Otherwise, we're still seeing some interest in the market.
Now let's talk about the naira, Sam. We know the naira lost value. It lost actually about 1 naira. We're not talking, of course, about the interbank market, where we saw it gain strengthen just slightly. Now we know the CBN intervened by selling $200 million at the WDAS auction on Wednesday. How reassuring is this for you? And will there be bigger tests ahead of the CBN's resolve?
Well, I think kudos will go to the central bank for sustaining the naira level at where it is at the moment. On Tuesday was the first time they've intervened, outside the WDAS window since the beginning of the year. And what they did was to react swiftly to the movement in rates in the interbank market. You will recall that a lot of demands have been moved also out of the WDAS window to the interbank market. So you will naturally see the spike, especially when the supply side is very minimal and these demands keep coming. You will see some of this spike. I don't think moving from the 158 level to 159 is anything to worry by at the moment. In my opinion, these are probably just sentiment of traders because they've seen 1 or 2 repatriations and they probably think it's a sustained repatriation. So you see people being sentimental and going long on FX. That's what I think is happening at the moment. But the central bank, like I said earlier, has shown the resolve that they can support the naira whenever the naira tries to move beyond this range.
Now, Sam, also we're expecting the MPC meeting next week. What do you think the outcome will be? We saw inflation numbers come out at 12.9% this week. Should we expect further tightening from the CBN? And of course, considering the inflation number, will we see any changes in the FX policies?
I don't think the central bank is going to do anything different from what they did at the last MPC meeting. If you look at the communique from the last MPC meeting, they said they are not willing to support easing of monetary stand at the moment, and also they don't think it's time to continue the tightening measure. They've been doing it since 2010. They front-loaded some of these measures, and that is what we are seeing. Even the inflation figures at 12.9 is nothing to cry about. I mean, they've already projected that we'll probably see 14.5 around June levels. The market has also traded this sentiment, and this after June level, they start trending towards single digit again. So 12.9 is nothing to worry about. Already the tightening measure by the central bank has succeeded in attracting foreign reserve. It has succeeded in bringing accretion to reserve. It has succeeded in also reallocating investment in favor of naira asset. So I really don't think they're going to do anything different from what they did at the last MPC meeting. So in my opinion, if you ask me what I think the outcome of the MPC meeting on Monday and Tuesday will be, I would say that they will maintain the MPR at current levels. They will also maintain the corridor. They'll probably also maintain CRL and liquidity ratio and where it is, because I don't think the pressure on FX is anything for them to take any drastic measure at the moment.
Well, Fumbani will certainly be watching that, but I'd like to know what your outlook is on the Naira, Sam. Do you see it strengthening further, weakening, of course, remaining flat?
On the short term, I think we're going to see some slight weakening, but with the central bank ability to intervene, I think it's going to keep it stable. But on the long end, I think with more confidence in our market, I think we're still going to see some offshore flows, and that will probably bring some appreciation to the currency.